Hi there, welcome to Swing Trading Journey. My name is Professor Benjamin Smart. I am not a professor in finance or trading or anything like that. I'm a professor in philosophy of medicine and, technically speaking, an associate professor. I work at the University of Johannesburg, and swing trading is a little bit of a hobby of mine. But I've decided to set up a YouTube channel. I doubt very many people will follow me. But really the main purpose of this is to improve my profitability by forcing me to stick to my guns. So I found this year that I've made a lot of good calls. I've predicted in advance where I think the market's going to go. I've said to myself, right, I'm going to sell here and then buy here. I've planned the trade, but not traded the plan. And the reason I've not traded the plan is because I haven't really had the pressure on me to do it. I've pulled out as soon as there's been the slightest bit of rip in the market when I've been selling the rips and not sort of holding out for my profit targets. And I figure that if I've got it all online, there might be a little bit of extra pressure on me to stick to my guns. So that's the plan. But if you want to follow me along as your sort of average Joe trader, then you're very welcome to. I'll be 100% open about all my trades, how much money is in my account, whether I've funded it, what my profits and losses for each trade. But an obvious warning, I'm not a financial advisor. When I say I think the market's going up, that absolutely does not mean that the market's going up and vice versa. I wouldn't follow my trades if I were you, at least not at this time. I've been trading for about 10 years. I started off losing a little bit of money. Well, I think I initially made quite a lot and then lost all of that. And then more recently, I've become a sort of more break-even trader. I haven't had to declare any money to the taxman in South Africa since I moved here in 2015 because I haven't made any profits at all. And yet, you know, when I look at my account summary, I'm break even there or thereabouts. Despite the fact that I typically have found that I call the market direction fairly well, at least I do in my head. Whether I do in reality, I'm not sure. On the longer scale, I seem to get it right. On the shorter scale, I seem to get it wrong, which is why I want to focus on swing trades with bigger targets and stick to my guns and have this sort of swing trading diary in place as a way of making sure that I sort of stick to that. So yeah, that's the overall plan. Just to give you a little bit of background to myself, like I say, I'm a philosophy professor specializing in philosophy of medicine, but I do have a bit of a background in finance. When I finished university, I worked for Royal Bank of Canada, the trust company. Then I worked for Ashburton, an investment management company, just a little bit of work experience there. And prior to getting my academic job, my official job title was investments analyst. So I do have some knowledge of the financial markets. I know which indicators work for me. I typically look for divergences in the RSI and to a lesser extent the PPO to sort of get an indication of where momentum is turning. So I look for bullish divergence when we're getting lower and lower in prices, but the momentum isn't going lower and lower. We're getting divergences. At that point, I start looking for buy signals and vice versa. That's my main trading strategy. It's quite a simple one, but it tends to work, and general support and resistance lines, the kind of thing you'll find on any technical analysis sort of textbook. Yeah, so that's my background. Just to give you a little bit of idea of where I'm trading and how I'm trading. I use IG Index. Currently, my account is at just, I think, £767, something like that. Now, with that sort of relatively small amount of money, you can't really trade the individual stocks, although IG does offer it. You can trade Netflix or Tesla or whatever you want. The margin requirements are too big if you do that with such a small account, and it charges you £10 per trade to get in and out. So if you want to sort of get out slowly, it costs you money every single time, and that's not really feasible on such a small balance. So right now I'm sticking to trading just the Nasdaq, or Tech 100 as they call it, and gold and S&P 500 and these other markets where the margin requirements are lower and the fees are much better. Similarly, the actual fees, there's no fee in addition to the spread when you're trading these CFDs. So it effectively costs you £2 to make each trade, which is perfectly reasonable if you're looking for a 1,000-point move, as I am now. I'm actually I've just shorted the market after some selling into the close on Friday, and I'm going to look for a move down to around about the 10,000 area. Now it says here 11,324. That's the Tech 100. It's not the same as NQ. That's the futures. That's trading a few points higher, but this is the market I trade. Okay, so let's just have a look at TradingView and show why I'm looking at this trade. Okay, so here we see clearly in a downtrend, have been since the beginning of the year. We've had two big rallies into resistance. It actually broke through the resistance here, almost made it up to the 200-day moving average. But then we got a CPI print. Inflation is running super hot. We've got a war going on in Ukraine. I mean, the fundamentals of the market are looking pretty terrible at the moment. And with the rates decisions coming out of the Fed last week, another 125 basis points for the end of the year, and Jerome Powell talking extremely bearishly, it's very hard at this point to see how we're going to recover this market by the end of the year. So what do we think is going to happen? What do I think is going to happen? We do have support here, right here, at around about 11,050 odd, the June lows. We could well get a reaction off of that, but by the time we get there, I think the bullish divergence that we've had is going to be burning off. Okay, we can already see here on the daily that we've made a new lower low on the RSI, so that sort of momentum indicator is telling us that we're beginning to go down. We haven't burned through from all the way back here, but I think we're really looking at this low here, and we've sort of gone through there. So we could get a bit of a reaction at that point, but how big a reaction? I suspect we're not going to rally above this sort of level here around 11,500, 11,600. Okay, so I'm shorting the market. I was short from Friday, took some profits on. So I was short on Thursday. I took some profits on Friday, and we rallied up into the close. And as you can see here, I've taken another short out as we've rallied into the close and sort of touched this trend line here. I haven't drawn that trend line in because there's not much weight to it. We could well rally a little bit higher. So I've got my stop currently at 11,645. I might just raise that to 11,750 just to give myself a little more wiggle room. So let me do that now. 11,750. And my target is 10,050. Now, why 10,050? Well, 10,050 is just above the pre-COVID highs. Okay, so the pre-COVID highs are at 9,800, but that is obviously the target that everyone is looking at, right? So there's a lot of people shorting the market right now, getting rid of their stocks. The short sellers are coming in. And when you've got such an obvious target like that, often the buyers are going to step in a little early. I will look out for indicators of that. I'll certainly keep an eye out for bullish divergence that will tell me that this is going to happen. But with the big round number there at 10,000 and 9,800 as the obvious target, I think it's sensible to put a target of 10,050. And that will give me a good ratio. Okay, so if I lose, I'm risking about 400 points, but if I win, I'm making about 1,300 points. And my trade size, by the way, is 85 pence. So we're looking at around about £1,000 of profit. And given that my account size is currently £767, that would be a huge win. And I'm sure a lot of people might watch this and think that's irresponsible, and you should only trade 2% of your account size on each trade and this kind of thing. Well, that's fine, and once you've got a big account size, once you're trading with $10,000 or whatever the case might be. But I'm very much an amateur. If I blow this account, that's fine. It's not going to bankrupt me. It's just a loss of a few £100. Still a lot of money, but I'm pretty confident that this is where we're going. I think we're heading right down here, and I think we're doing it within a few weeks. So yeah, that's my plan, and I'm going to post this on YouTube so that it's out there. And I can't take it back. So I'm not closing this trade until either my stop gets hit or my profit target gets hit. I may take some profits on the way down. Perhaps I take a little bit of profit here. There is support here at that June low, 11,050. I may sort of just take, so it might. I'm currently short 85p per point, so I might close, let's say 40p of that, look for a bounce, and then sell again. But if it blasts through that by 100 points or so, then I'll just add back in. But other than that, that's the only really support that I can see. And so my plan is just to, there's little bits here, a little bit here, but nothing significant. We're going to make our way down pretty quickly, I think. But very easy to be wrong. It's a little bit of a casino, and we'll just see where we go. Okay, thanks for watching it. Anyone who has, it's my very first video. I expect if it ever gets watched, it might be a long way down the line once I've been doing this for a while. But good luck with all your trading. If you have any comments, let me know what you're doing. I claim absolutely no authority, so I'd be interested in whatever ideas you might have. I should say that there are some really good people out there to follow. I would follow a guy called Money Maven. He's excellent. I listen to him every single night. And not to plug him too much, because of course everyone's wrong sometimes, but you could do worse than listening to what that guy has to say. But be wary of the perma bulls and be wary of the perma bears. That's what I found over the years. The Peter Schiffs that are constantly plugging gold, those kind of people, the Kramers. You can lose a lot of money listening to those guys. So be a little bit careful out there, manage your risk, never lose more money than you can afford to lose. These are all things that I have to tell myself. Yeah, so I look forward to sharing my swing trading journey with you all.